How does a company sell its own name? And how does it get paid for it? With its own money. This is the bizarre and perhaps brilliant story of how Aston Martin orchestrated a £50 million deal with itself to save its future, and in the process risk its entire legacy. This is a high-stakes corporate chess move, a landmark case study in financial engineering played out in the public eye. To understand this move, you have to understand that Aston Martin, the iconic maker of James Bond's cars, is in a precarious position. This isn't a story about a brand at the height of its power. It's a story about survival. And at the center of it all is one man, Lawrence Stroll, a billionaire betting that he can steer this 111-year-old British icon away from the cliff's edge. The question is his latest move a stroke of financial genius, or is it an act of desperation that will forever tarnish one of the most prestigious names in automotive history? Let's break it down. The story broke just ahead of Aston Martin's annual results on February 25th, 2026, a set of results the company already warned would be grim. The announcement was as confusing as it was shocking. The public car company, Aston Martin Lagonda, was selling the perpetual naming rights for its Formula One team for £50 million. The buyer? A company called AMR GP Holdings, which operates the Aston Martin F1 team. And who controls AMR GP Holdings? The very same man who is the executive chairman and largest shareholder of the car company, Lawrence Stroll. Effectively, Lawrence Stroll's F1 team was paying £50 million to Lawrence Stroll's car company for the permanent right to use a name it was already using. It's a transaction that seems to move money in a perfect circle, a piece of financial maneuvering so audacious it left analysts and fans alike scratching their heads. Is this a legitimate strategy, or is it a house of cards designed to mask deeper problems? To unravel this, we need to look at the immense pressure Aston Martin is currently under. It is a brand built on an image of sophistication, performance, and British heritage. It is the car of spies, an emblem of luxury. But behind that polished veneer lies a brutal century-long history of financial instability. The company has a history littered with financial collapses. Its initial public offering in 2018 was a disaster, and it has been bleeding cash ever since. But why the struggle? It's been a perfect storm. The company delivered nearly 10% fewer cars in 2025 than in 2024, dropping to 5,500 units, and faced significant headwinds from US trade tariffs and weak demand in key markets. This turmoil hammered the company's share price, which lost about half of its value in the year leading up to the announcement. The company's cash reserves at the end of 2025 stood at a meager £250 million, down from £360 million. This dwindling pile of cash is what lenders and investors watch like a hawk. When it gets too low, the alarm bells start ringing. Aston Martin was and is in a fight for its life. It needed cash, and it needed it quickly. This immense pressure is the context for the £50 million deal. It wasn't born from a position of strength, but from a desperate need to keep the lights on. And this is where our main character enters the stage. To understand how this deal was possible, you need to understand Lawrence Stroll. He is not your typical corporate executive. A Canadian billionaire, Stroll made his fortune in high fashion, instrumental in the global growth of brands like Tommy Hilfiger and Michael Kors. He's a man with a deep passion for motorsport, and his involvement is not just business, it's personal. His son, Lance Stroll, is a driver for the Formula One team. His journey into the heart of Aston Martin began in 2018 when he bought the struggling Force India F1 team. Then in January 2020, he made his big move, leading a consortium to invest £182 million into the struggling Aston Martin car company, becoming executive chairman. With this, he tied the fate of the car maker to his F1 ambitions, rebranding his team as the Aston Martin F1 team. The ownership structure is a complex web. You have the public car company Aston Martin Lagonda, where Stroll's U-Tree consortium is the largest shareholder with over 32%, alongside other giants like Geely and Mercedes-Benz. Then you have the Formula One team, a separate company operated by AMR GP Holdings, which Stroll also controls. This separation, though, is key. The car company and the F1 team are legally distinct entities, even though they share a name and a chairman. This structure is what makes a deal like this possible, but it raises a huge question. When a man is essentially negotiating with himself, who is looking out for the other shareholders? The deal required formal shareholder approval, but this seemed to be more of a formality, as shareholders representing over 54% of the company, including Stroll's own consortium Geely and Mercedes-Benz, had already given binding commitments to vote yes. The deal was set to go through. So what exactly did this £50 million buy? On the surface, it's for the perpetual naming rights. This means the F1 team company now has the exclusive right to use the Aston Martin name forever. But here's a confusing part. The car company already had a long-term sponsorship agreement in place with the Formula One team. So why pay £50 million for something you essentially already have for the foreseeable future? This is where the distinction between sponsorship and perpetual ownership becomes critical. A sponsorship deal is a rental. The car company was a sponsor, linking its name to the team to create a marketing halo effect. This new deal is a sale. The F1 team now owns the naming rights outright. The immediate effect is an injection of £50 million in cash onto the balance sheet of the beleaguered car company. This isn't a loan, it's revenue. It instantly improves the company's liquidity, providing a crucial financial buffer. It's a clever way for Stroll to inject his own capital into the car company without simply buying more shares and further diluting the stock. The deal also creates a clearer separation between the two entities. By selling the rights, the car company detaches itself financially from the Formula One team. Should the car company, in a worst-case scenario, go bankrupt again, the Formula One team can continue to operate as Aston Martin. It ensures the brand's presence in motorsport is secure, no matter what. The reaction to this has been sharply divided. It is a brilliant strategic masterstroke, or is it a desperate move that signals the company is on life support? The truth probably lies somewhere in between. Let's first look at the bull case, the argument for genius. From this perspective, Lawrence Stroll is playing a long game. He is using his Formula One asset to prop up his road car assets. He solves an immediate liquidity crisis without the messy optics of a direct bailout. He simultaneously secures the Aston Martin name for his Formula One team forever, increasing its intrinsic value. This move solidifies the brand's commitment to Formula One, which is central to Stroll's entire strategy. His plan hinges on the 2026 season, which will see Aston Martin partner with Honda for engines and bring on legendary designer Adrian Newey. These are massive investments aimed at turning the team into a championship contender. If Aston Martin starts winning, the marketing value will be immense. This £50 million deal can be seen as a bridge to get the company to that promised land. However, there is a powerful counter-argument here, the bear case. For many observers, this deal smells of desperation. Headlines immediately focused on the profit warnings, the debt, and the internal cash shuffle. For a luxury brand, perception is everything. A name like Aston Martin shouldn't be the subject of fire sale announcements. Critics argue that a healthy company doesn't need to sell its own name to itself to stay afloat. The circular nature of the transaction has been likened to creative accounting. It can be perceived as self-dealing, a move that benefits the majority owner more than the company itself. And it raises a blunt question. If the car company is bleeding so much red ink, what happens if it goes out of business? The fact that an F1 team carries its name might feel less like a tribute and more like a ghost at the feast. This is the core of the gamble. Stroll is trading a piece of the brand's intangible prestige for very tangible cash. He is betting that short-term stability will allow the company to survive long enough for his long-term F1 strategy to pay off, powered by new cars like the much-anticipated Valhalla supercar, which could dramatically improve financials. But if the F1 project falters, this move could be seen as the moment Aston Martin began to cannibalize its own brand in order to survive. It's a high-wire act with no safety net. So Aston Martin has sold its own name in a £50 million deal funded by its own majority owner. On one hand, it's a shrewd piece of financial engineering. Lawrence Stroll has found a way to inject vital funds, protect his F1 assets, and buy time, betting everything on future success, powered by Adrian Newey, Honda, and the allure of new hypercars. On the other hand, it's a move fraught with peril. It risks cheapening a brand that trades a century of prestige for a name synonymous with luxury to be publicly sold off in what amounts to an internal transaction can be seen as a sign of weakness, not strength. Ultimately, the story is about the clash between legacy and necessity. Only time will tell if this £50 million gamble was the move that saved an icon or the one that began to erode its very soul. Now, I want to hear from you. Do you think this was a brilliant strategic move by Lawrence Stroll? or a desperate act that will ultimately damage the Aston Martin brand? Let me know your thoughts down in the comments below.
For more trending brand news, subscribe to our channel and visit designrush.com.